Your market news now. The rand peaked at 18.38 earlier today, but the rand is a little under pressure ahead of the budget. Fiscal consolidation, expenditure and economic growth forecasts could drive volatility into the currency, but with downward revisions to economic growth expectations and the resulting impact on fiscal ratios, the currency is unlikely to draw much in the way of support. Looking at company news, fund management company Coronation has announced that it will apply for leave to appeal a Supreme Court of Appeal judgment that ordered it to pay SARS additional taxes linked to its Irish operations. Providing an update on the financial impact of the SAA ruling, Coronation has raised a provision, and based on all the financial years from 2012 to 2022, the estimate is between 800 million to 900 million rand. But to talk to us about the markets, we are joined by Carmen Belona from Sanlam Investments. Carmen, thank you so much for your time. I gave a brief overview on the performance of the currency earlier, but when you look at the rand, at least over the past month, what's your assessment of it?
So we've definitely seen a significant weakness in the rand due to various issues, both global and domestic. Year to date, it has weakened just about 6.7%. I think, as you've mentioned, that we are looking out for what's coming out of the budget later today, and depending on which way it swings, we are most likely going to see a reaction. Markets currently looking for a more positive reaction, so that's something to look out for the rest of the day.
Well, I was looking at U.S. stocks and the performance yesterday down, and you then ask yourself whether are we seeing a capitulation when it comes to the markets, or is the reality starting to sink in for the markets that in order to get to an inflation number that the U.S. can accept, it's going to be a bumpy, long road?
Yeah, so yesterday was a bit of an anomaly because on Monday we did see the U.S. closed. So it was the first day open yesterday, and that was the reaction. As you have mentioned, there has been some concern on the back of those very strong economic numbers. So CPI, PPI, the resilient labor market in the US, which has given an indication that we're likely to see inflation higher for longer, number one, and therefore likely to see maybe more Fed increase in the interest rates for the remainder of the year. So not the positive that we had hoped for, which was looking for declines in the interest rates to start happening towards the end of the year. So that risk off has come through, and we've seen that in the US and both here in South Africa as well.
On that note, then, when you look at the move in US yields, especially when you look at the 10-year yield, what interpretation are you getting from it, especially for markets?
Yeah, so definitely some more pain for longer, effectively. We did see the 10-year yesterday jump once again, so reach levels that we saw last in November. Keeping in mind that at the beginning of this year, the market was a lot more positive. So it's gone in the wrong direction, unfortunately. So it looks like the market is starting to factor in and accept that it's going to be higher interest rates for longer.
The one thing that caught my attention, and it's quite interesting, you use the word painful, has to be Tiger Brand's trading update for the 4 months to January. And they mention here that each stage of load shedding is costing them 250,000 rand per day. Current stage 6, they're burning 1.5 million rand, and it just gets worse from here, an extra 15 million rand a year in maintenance costs. That's quite scary, and you then ask yourself whether at some point will this be passed down to consumers in terms of price increases, and at what point do consumers start moving elsewhere into discretionary retailers or avoiding them?
Yeah, so it's a very, very tough one, as you've mentioned. One that you did miss out on is that the current infrastructure within these different corporates are unable to manage the length of time in terms of the electricity outages. So adding on to the numbers that you've mentioned, you've also got to remember you've got to replace all these things as well, and bump up in terms of if we do expect stage 6 to last a lot longer, the infrastructure needs to be able to maintain that. Adding on to that, as you said, we did see in this trading update, Tigers has said that the internal price inflation was up 18%. So we are seeing a pass through to the consumer. whereas the volume numbers have come down by 1%. So a direct indication, as you've mentioned, does the consumer pull back? So we've seen that in terms of volume, but they have the shining lights for them has definitely been the snacks and treats as bakery as well. So those have been the divisions that have been sort of the shining light. But I think the overriding theme here is definitely going to be the long-term, medium to long-term impact of the current load shedding and the impact that has on operations.
So with some of the SA-listed companies set to release their results, which companies are you going to be paying close attention to and what sectors?
So I think it's more on a sector and a theme level, and a theme I'll reiterate again. We'll see a lot of the companies are going to give us an indication of what the increase in operating or electricity or energy cost is going to be for them, number one, but more importantly, the guidance that they're going to provide going forward in terms of, how much of the operations can sustain the current level of load shedding and what they need to do to bump up to ensure that they can continue operating through stage 6, even at a level of stage 8. We did see some of the finance sector come out and say that they are factoring in a complete shutdown of the grid. So that's also something to look out for. Adding on to that, we've seen some of the miners come out, production numbers not as high as was expected. So Sibanye and BHP, etc. And the read-through there also is, what is the long-term impact of this on the economy? So on a top level, as you've asked, definitely a theme in terms of electricity and the impact of that on operations. And then on a sector level, I think the miners are pretty big at this point in terms of the contribution to the JSE. So definitely keep a keen eye on that.
With just under a minute to go, the one key thing you're going to be listening out for when the finance minister delivers his speech?
I'm going to reiterate again, I sound like a stuck record, but it's going to be Eskom to see what support they're going to give Eskom. And then lastly, just the sustainability or the increase or decrease of the social distress grants.
Carmen, thank you so much for your time. That is Carmen Belwana from Sanlam Investments. Looking at the Rand right now, trading at 18.28. And she did mention year to date, the Rand down about 6.7%. And we are seeing that the risks to the Rand, the budget presentation, energy crisis already been priced in the steepness of the yield curve when we look at the 10-year bond movements. But we'll unpack all of that a little bit later on. But that's it from me. We're going to take a quick break. And when we come back, Nzinga Gunta will be with you.